I take that as its average GY. Okay, let's get started, guys. Now, last time I was on FX Street, we got sort of a little bit sidetracked, and someone at the end of my little session was asking about price action, and I sort of tried to throw something together in 5 minutes. Not the price action as much as the fractal nature of the market, trying to understand it. And so I said, well, when next time I come back, we'll do fractals. And everyone sort of said, yay, great, awesome. So here we are. We'll spend this session just talking about the fractal nature of the market, okay? And I think it's important to understand it's the cornerstone of probably how I trade, that and price action, and understanding how fractals work, okay? And it can be very powerful in your analysis, your trade planning, and as I'm finding out these days, the trade management. If we get time, I'll show you what I mean. And so, that being said, I think it's important that we spend the session looking at it, and hopefully you guys can, it'll shed some light and give some good insight into maybe where a few of you guys' gaps are in your trading, or for maybe a lot of you who aren't having that much success, maybe can put a different spin on things, a different angle on the markets, especially the technicals, and could help you along with your trading. Okay, so let's get started. I want you to focus. This is a diagram that I drew a couple of years ago for my FX Bootcamp class, and I want to just highlight a few things on here. Not specifically all the writing that's on here, but just the arrows. Okay, and I want you guys to think about how the money markets can work. Okay, if we in this example look at that yellow line as being a daily swing, and we look at the pink as maybe being a 4-hour chart, and we'll look at the green as being, say, 15 minutes in this example. Okay, that's the time frames. That's how the fractal nature of the market works. Therefore, if I highlight, when you look at a daily candle or swing, I should say, it's very important to understand that a daily swing in most cases will be made up of what on a 4-hour chart? Can anyone tell me? No worries, Money Magnet. It's actually a 4-hour, what we call move fit, okay? The 4 hours starts swinging its way up. I'm highlighting it in green. And then it actually starts swinging its way back in a downtrend. But once it reaches support in the nature of the daily swing, the 4-hour chart actually changes trend back to the upside and continues. Okay, that's how things are always going to work in the nature of the markets. Okay, so that being said, on a 4-hour swing, which is, we'll just highlight this first one down here in the bottom left-hand corner, which is now I've highlighted in green. What's a 15-minute going to do in the context of a 4-hour swing? It's going to be the same as a 4-hour, probably in relation to the daily, but a move fib down there. Okay, so let me highlight that. A 15-minute chart's generally going to start just swinging its way up, then get itself in a little downtrend, and then at support of that swing, then changes trend and off it goes. Yeah, you can look at that, Len. People will look at the same sort of thing. I don't look at Elliott wave theory at all, but it's, you can sometimes see how people look at Elliott wave and go, oh, within the move up on the daily, we're at a wave 3, which is basically the shorter time frames doing their thing. Okay? So why is this important, or how this is important, guys? Well, when you're doing your analysis and trading, when you turn your charts on every day, you can go through all the fractals, or all what I call fractals, or your daily, your daily chart, your 4-hour chart. You can see where you're at support and resistance in these fractals, and then trade plan accordingly. Okay, so for example, if you came into trade one day and you were down here, where I'm putting this blue box, and you looked at your 4-hour chart and it's swinging up nicely like this in a nice trend. Remember, we always want to trade a trending market. Okay, and then you get a 15-minute chart, the green arrows looking to change trend in terms of price action in that area. At support, you can trade plan a long, can't you? In the direction of the 4-hour chart and all that sort of good thing. Likewise, if you came into your charts and you saw that you were at a daily support level, and there's a 15-minute change of trend going on, you could trade plan an even bigger long based on the fact that it's this big swing here at support, and you can. So whilst over here it might be a position trade based on a swing trade, something you might get into in Asia, get out, and you might look for a swing trade, get in Asia, get out in New York. This one over here, at the daily swing, you might look at get in on a Monday or Tuesday, getting out on a Friday, that sort of trade. Okay, it's all to do with the fractals and where we are. Likewise, if you came in and you go, oh, 4-hour changing trend, 4-hour chart changing trend long after coming off daily support, that also is another swing trade plan over here. I mean, it opens up all the, the fractals, trading along with the fractals and getting where your fractals lined up can be almost like a robotic way of looking at the trading. Now, Sai1 Borg, to answer your question, I look at, for me, I'm fibs, pivots, psych levels, role reversals, and things like that. Okay, so for example, I would, if I was trading this over here, if I saw this and down here, I'm looking at that role reversal line there. I'm looking at, say, a 50% fib. I'm looking at a central pivot, whatever's around there. And the more confluence of support in that area with my 15-minute change of trend, the more likely I'm gonna give that the long treatment and try and ride it as long as humanly possible. Okay. So you want, well, 1-minute charts. The minimal chart I use GY is 15. I'm not a 1-minute fan at all. That's, to me, that's, I joke around with my class a lot about this right now. By the way, Boyke, I'll just put that big blue line on for you I think you wanted. And if you got any questions about it, please feel free to ask. Why don't I like the 1-minute charts and stuff? Because you're basically scalping your way around. You're like in the trash can scavenging for pips. Not my cup of tea. I'm a 50 to 100 plus pip trading kind of guy. Did you just want that for a screenshot or something, Boyke, or do you got a question about that? We good? So where else can this be beneficial? Well, it's good in terms of analysis and trade planning. By the way, I'll get the live charts or some charts out in a minute. We'll look at it in a more live environment with candles. But think about trade planning as well, or management, I should say. Let's say you take a long on a 15-minute change of trend, so a very small fractal time frame, change in trend at support of this big rise here. So you're in open of London or something, so there's a bit of time of day, and there's pivots, and there's a psych level and all sorts there, and the 15-minute chart's changing trend, bang, you take a long, and off it goes. Okay, and then you come to Asia the next day, so this might be London. Then Asia the next day, they short it. But you've sort of got your stop at break even, just leaving it, just chilling, because you're hoping it's going to go and come up here somewhere. And then suddenly the 15-minute changes trend long again. So basically there was an attempt at shorting that failed here. The change of trend where I'm putting the line, it went long again. Well, that's an excellent place to take stop loss and move it. Okay? And then it gives you options, once it's reaching your target up here, then once you're you might just start tracking swings. So once you start tracking swings, boom, do all that sort of thing as well. Oh, I have no idea. I'm basically fractal self-taught. Okay, so that's sort of basics about how fractals work. So in a nutshell, I look at the long-term charts and their fractals, and then when those long-term charts are at support and resistance, I look to trade in the short term. Okay, let me give you an example of here's a chart, here's a pair here that we've taken in a live trade in my class. Okay, so let me give you a live example. The daily would be the yellow boyki, the pink would have been, say, a 4-hour, and the green a 15-minute. Okay, so just check out this example here, guys. This is how we're trading. We're doing pretty good things in Bootcamp Asia. We're sort of taking the longer-term fractals and then bringing in our short-term fractals, and then off we go. So a couple of weeks ago, we took this trade here, where I'm putting that box. Okay, you'll notice here, this is a daily chart. Okay, guys, I cannot overemphasize how important it is to have a good understanding and analyze off some sort of longer term time frame. I don't care if it's a 4-hour or a daily chart. You've got to pick something longer term and look for changes of trend or areas of support and resistance to trade off. Okay, so we missed the short here where I'm putting the arrow, which interested me because we had lots of roll reversal in here. So a 15-minute change of trend up there, I would have taken a shot. But where I've got the box, we took a trade. Why? Well, it's a a daily change of trend in terms of price action. Swinging up here. Okay, bang, pull back. We knocked out several areas of support, namely this one here where I'll put the arrow. Okay, so in terms of price action change of trend, that's a change of trend through there. Support was broken. Okay, then we pull back to resistance in the context of the change of trend. Okay, on our daily chart, and then we go in on our 15-minute chart and we look to take the change of trend on a short-term time frame, and off we go. And because it's a daily change of trend at resistance in the context of this whole move to the downside, we can try and hold that long time right down to, say, the bottom of this little area here. 15-minute Lex is what I enter off. Okay, so here's how I confirmed it. I'll show you. Okay, if I take this little triangle here, and I'll put it exactly where I did it. Okay, and then I'll go to my 15-minute chart. See that? Here's exactly where it was happening. We opened Asia. We were lucky, I'll be honest. We opened Asia, 15-minute chart swinging up here, and suddenly bang. So the 15-minute chart basically just did what you saw that daily chart do, but it's on a 15-minute chart. But it's a sign that people are selling, are looking to sell at resistance. Okay, so when we pulled back here in Asia, we took a shot, pulled the trigger, short, bang, with a higher high stop up here. Now what happened was we had this very interesting candle here where we had the Aussie interest rate decision come out later that, about 4 hours later, and it nearly knocked us out with a loss. But then it gave us the catalyst we needed. And then after that, it's been see you later. Now it's just falling through the floor. Fib time or price market timer? I don't do time. I'm not a fib time person. Never even looked at it, if I'm honest. Might do one day. Okay, so that's sort of understanding the fractals. Another way to have a look at it is to use some sort of, to get a good understanding, is some sort of simulation tool like Forex Tester or something like this. See this here? What you see here is 15-minute chart with overlay of 4-hour candles. It's a little indicator that I've got. So it posts what 4-hour candles look like with a 15-minute chart, on a 15-minute chart. So you can see here, as an example, the 4-hour chart swinging down here. Okay, at these areas of resistance, we're getting our 15-minute changes of trend. Okay, you can see the 15-minute changes of trend. No, I can't do that. I'll zoom in here. See, here's our 15-minute change of trend through here. Here's one at resistance. Coming up, pull back, lower highs, lower lows, pull back, short, bang, gone. And that's happening, that's resistance in the context of a 4-hour downtrend. This is called, this indicator here is called custom candle. I think you can just go and, if you just Google that thing, you'll find it. Custom candle 6. Otherwise, pop me an email to robert@fxbootcamp.com and I'll send it to you. And it's pretty good, depending on how you like to trade. Let's say you like something a little bit like me, a longer term. You can just change the candle. See the value here, time frame 240 minutes, which is a 4-hour chart. If I go 1440, i.e. a daily chart, it turns those bars to daily candles, and then you can really see how the daily chart works. Okay, so you can you'll see here, daily chart, pull back, swinging long, pull back down, 15-minute changing trend there. at support of the rise. Off we go. Very, very cool. A very, very cool tool to understand fractals. Okay. Here, right here, guys. A trending market. Hello. Up trending. Pull back. Support in the context of that daily uptrend. This is why I look at my long-term time frames. You can see almost a 15-minute chart is changing trend in there long at support of that rise. We've got roll reversal in here. In this area here, it's about what, a 50% fib of that rise there. Well, if I draw my fibs around the right way. Probably some pivots around there if you've got a pivot plotter out. 618, I apologize. Off you go. Okay. If you looked at that with a 4-hour chart, I'm not sure if I can also add the 4-hour candles. Let's try. Oh, you can. So let me, you'll see in here, is it easy to see? I might have to do it in a different color. The 4-hour chart, yeah, it'd be best to do it in a different color. The 4-hour chart actually swinging up through here. I'll just highlight it in blue. Swinging up. And then our 4-hour chart actually goes to a downtrend there. Find support, off we go. Just like that diagram I showed you. That, guys, that is everywhere in the markets, those sorts of fractal moves. They are everywhere in Forex, in things like gold, in stocks. I mean, I could give you a gold chart and highlight exactly the same sort of thing. Or Apple or Google chart or whatever. It's the fractal nature of the market works everywhere. So it's pretty powerful in terms of trading any instrument, okay? So GY is asking my point of entry. My point of entry, GY minimum is a 15-minute change of trend. Why is that? 15-minute. You're going to get, if we just go to live markets here somewhere. If we just go to, let's go to something different. Let's go to the Aussie dollar right now. Okay. I'm going to highlight a couple of days here. Just in terms of time. Okay, so there's 1 day. We'll go a little bit backwards in time here. Okay, and then we'll do one more date. The reason why I'm doing this is to highlight the fact that there's a good chance. Yes, I do. I haven't traded off a short-term time frame like a 1-minute chart or 5-minute chart. I haven't traded off anything like that for 2 years. I just decided one day that they just are making me a little bit confused and just throwing an extra layer of complexity on something that's already difficult. So I just got rid of them. Okay. Now, I'm going to highlight probably a couple of things. We've got one here. Just grabbing a pen. Hang on, let me just go this way a bit. Okay, that'll do. One, I would say 2, 3, 4, 5. I'm just circling what I think are probably the 15-minute changes of trend. that you would trade off at support or resistance, okay, in 3 days. So there's probably 1, 2, 3, 4, 5, 6, 7, 8. In 3 days, approximately 8 or 9 changes of trend. So the way I think is this: is if I'm going to get if I'm going to use a time frame as my base entry time frame, remember I'm a bigger sort of trade kind of guy than most people. I go after big trades. Okay, I go after the big fish. I'm willing to sit on the sidelines and do nothing for days on end, and then wait for the big fish to come along and hook it and stay on that trade for a week or two. Okay, I'm not the get in, get out, 17 times a day kind of guy. And so what I was thinking was, well, if I'm after a time frame that I'm going to enter off, a 15-minute chart sort of changes trend probably maximum 3 times a day. So this could be Asia here. There's an attempt short at London and another long in New York. So that gives me sort of 3 windows of opportunity probably a day where 15-minute chart could guide me in addition to my areas of support and resistance. Okay? So, for example, if I was trading here and saw the 15-minute change of trend at London Open and I liked it in terms of support, I would long it. Okay, I'd give it the long treatment right in here where I'm putting the arrow somewhere. So I like a 15-minute change of trend. You get about maximum 3 a day. Sometimes you get 2, sometimes you get 1. Sometimes you get none where the market's so bullish or bearish it just swings on a 15-minute chart all day. Okay, rarely, but it does it. So I like the fact that there's sort of a 15-minute change of trend just sort of blends in nicely with my long-term areas of support and resistance. Also, I like the fact of a 15-minute change of trend that it can take. Let me show you. Let me highlight this one here. What I'm referring. I'll highlight this one. Up, pull back, long. That's a change of trend. Okay, we've been swinging down, and then suddenly, so higher lows and lower highs. Suddenly, higher low, higher high. Pull back where I'm putting the circle, long. Okay, and off we go. The reason I like that as well is I can highlight my zone of support that I like, and I know that it's going to take probably maximum or minimum 2.5 hours to turn up to do their thing. Gee, well, I like to get into a trade a day or something, but sometimes they break even, sometimes they're 50 pips, depending on how the management's been done, and sometimes they're several hundred. I'll show you, Boykie. Okay. So I know that there's here's an hour here. There's in this change of trend here, from where it hits a support area, it comes up, there's probably 3 hours in that swing alone. There's probably 12 candles. And then you get that one, and there's another 6 candles. So in this here, there's like a 4.5 hour time frame for a change of trend. So I know that once it hits my area that I want to buy from, I've got like hours. So I can be at dinner, I can out for dinner, I can be doing things with my kids, I can be at the movies, bling bling. Oh, Aussie's hit my support level. Cool, 15-minute change of trend there, I'm long in it. So then now I've got time. I can get an alarm in bed, look at it, and I'll look at my clock and go, oh, I've still got another 2 hours to sleep. I know that I'll be looking at the Aussie as soon as I get out of bed. And I really give it time to breathe. then you can see lots of consolidation and accumulation. This is sort of an example here where I'm putting the box, and that is clearly just people fighting at support and resistance. People here trying to long, hoping that we're going to do this. Yet at resistance of the move down here, lots of people trying to short. You know, this is last week, so the markets were a little bit funky at times trying to work out their direction. Yeah, but it's just a matter sometimes of being a bull or a bear, buying at support, selling at resistance. Okay, this is why I also wait for this 15-minute change of trend. I actually took this trade personally. The other reason I liked it, that area that people were shorting from on that move down, that got broken. Boom, boom, pullback, little stop down here, gone. Yeah? Boyke, let me show you how I can take a 15-minute change of trend and hold it. Okay? Here's that same trade, Boyke. This is the same trade on a 15-minute chart with daily pivot overlay. You see it? So here's my long, bang, at support of this rise. Okay, so what's the first thing I do? Well, once I get say 30, I'm not sure about you guys. I'm like a 30 pip in profit kind of guy. Move my stop to break even. But that's all because of where I like to long from. Okay, if you're a scalper and stuff and you like the much shorter term stuff, I wouldn't recommend that. But if you're like, oh, I like trading off these big 4-hour support and resistance levels or daily support and resistance, you got to let things breathe in these areas. Okay, you got to let this breathe a little bit in here. I keep telling my class right now, it's like a good bottle of red wine. Sometimes the best wines, you got to take the cork off it, pop the cork and let it sit on the table for 30, 40 minutes to breathe, and then it tastes really good. If you taste it straight out of the bottle, it's horrible. Let it breathe and suddenly, I don't know, something magic happens. Okay? So this is how I do it. Boyke, is first of all, you got to get it to like, say, 30 pips in profit, 30 to 40, stop at break even. Okay? And then maybe the first time you move your stop, you're going to be waiting for an attempt at a short of the market that fails. So you can see up here, price came up, 2 extreme pivots, by the way, so a resistance level, and the 15-minute chart had an attempt at shorting. Hit the central pivot and then kept going. So I would look at that and go, whoa, attempting at shorting the market at resistance, i.e. the pivots, that failed, hit the central and continued, stop loss. Move it. Lock that in there. Okay? And then I let it go again. And you'll see it just sort of keeps swinging up here for the day, swinging up here, swinging up here. What have we been trading off here? Well, we've hit 4-hour support here, okay, and we've continued long. So the first time I moved my stop was to break even at 30, 40 pips up. The next one was like the 15-minute move fib up here that failed. So basically I tell myself I've got it on my 15-minute change of trend, and I've basically survived, and probably because of the 15-minute move fib, the way it's done that, I've survived an hourly attempt at maybe like the hourly changing trend up there. So I move my stop. But now I need to let it breathe, right? If I believe it's going really far, like 103 or something. I need to let it breathe, and this is where it gets tough, is I need to believe that it's going to create another, say, 4-hour swing here. So I'm probably hoping for something like this. So I'd move my stop if this happened, and I do have a stop below here right now. Okay, and so now it's going to continue up and hopefully just keep going. And then I've got all sorts of other options to move my stop with similar failures at trying to along the market. Let's say this happens today. Let's say we go up here, and then we have another attempt at shorting, and then it just rolls over and keeps going. I'll probably just move my stop up here. The market's showing some momentum, and I'll just keep riding that and riding it until it doesn't want to do it anymore. But I look at the fractal nature of the market in the opposite direction to fail, and then I move my stop. It's a big way of how I trade now, guys. I probably have to come back next month and do a webinar on trade management, because I'm finding now that trade management, like trading to me is so much about, it sounds, we read it a million times as traders. I don't really think about it, but letting your winners run and cutting the losers. And to me, it doesn't really matter where you get in. You just need to try and squeeze as many pips out of it as possible. And it's one thing I'm trying to talk to my bootcamp class about now. I'll be coaching along, and we will set a trade like this up in class. We will set a trade. Hang on, let me zoom in a bit. We will set this up in class. And I think this is a bit of a difference between being a full-time successful trader and not. We'll set that up in the yellow as a group. We'll go through the analysis and all the rest of it. And we will long it. Bang. Okay? And then the next day when we come back, I'll be like, my stop will be here or somewhere, and I'll be like, who's still in the Aussie trade? Put your hands up. And I'll be the only one with my hand up. Well, sort of, I define, Bobby, I define something way up the road, but I don't really follow that. I just try to squeeze as many pips out of every trade I can and get lucky. Right? And so I'll talk to my class. I'm like, why did you get out of it? I chickened out of it. I'm like, why? What? Markets always extend way more than you ever believe in either direction. GY, see this here? Let me show you something. You know what? I'll show you on this chart here. Okay. This is last week. Go back 1 week. This is why I'm highlighting this. This is a little bit of an aside to what we're doing here, but it's worth it. Okay. I want you to think about things a little bit differently. Okay? And talking about risk. I set this trade up here to short it in my Asia class last week. Okay? It's against the trend, so it wasn't going to be the world's biggest short. So I was planning on getting out down here somewhere on this trend line that was coming up. But we had this big gap, and up here is bucket loads of resistance. There was pivots, there's roll reversal on the daily, it's a major fib of the drop, it's a psych level, the $1 psych level. There's like 7 reasons to short it here. So the trade plan in my class was to short it down to support. on a 15-minute change of trend. Okay? The reason why I'm saying this is I'm going to tell you exactly honestly what I did. I shorted it about here in my Asia session. Okay? Over here, oh, by the way, here's my stop loss in yellow. Okay? Over here, up in these highs, sure, that's my bedtime. I'm tired. I need sleep. But I'm at break even on my trade. So what do you think I did? I'm around break even and I'm like, oh man, this thing's going sideways. What do you think I did? Well, I tell you now, I'm not one of these guys that stays up all night watching it go sideways. No, I just went to bed. Guys, I'm risking, on my 15-minute change of trend here at a higher high, I'm risking 20 pips. 200 bucks on a standard lot, 20 bucks on a mini lot, whatever. I just left it. I have confidence in my trade plans. Pretty much when I make a trade plan, it's a business decision. I'm going to go and lose 20, 25 pips, or I'm going to go and make 100 or more. That's the way. That's where I set them up. Okay. I got indicators, Sid. Okay, so that was, I went to bed. I said, oh, well, hero or zero, right? I did wake up in the night and price was down here somewhere. So yes, moved my stop to break even and then sort of moved stop to support and got knocked out down here for like 110 pips. But don't ever think something's too risky. I'm not going to trade it. It happens in the night. If you see an awesome setup, don't be afraid. I mean, this is what demo accounts are for. Don't be afraid to take a trade, risk 20 pips, big deal, and go to bed. My best trading, guys, always happens when I'm asleep. Always. I'm awesome trader when I'm sleeping. I don't look at the markets. I'm not tempted to change anything. I just wake up in the morning and move my stop around. Yeah, I can't micromanage. I'm not. Every time I nearly wake up in the morning and have had a good trading night whilst sleeping, I look at the charts and go, oh, I would have probably moved my stop there. Lucky I slept. I'd be out of the trade. Right. So someone was asking about all the reasons why we got into that trade. Okay. Last Monday. Here, let me show you on this 4-hour chart. 4-hour chart using the monthly pivots. Okay. First of all, where is it? I'll have to show you on the daily first. First of all, we're at the 382. We were, at the time, at the 382, perfectly of that drop you see there with the fib. Okay, so we were in here. That is also very nice roll reversal with this area over here. Okay, so previous swings. So there's a couple of reasons there. It's also $1. It's also it was the monthly central. Thank you, Kevin. Right in here. It was, I think, the weekly central, Kevin. It was daily extremes, I believe. Yep, right here. Daily extreme pivots, double top. What else was there? There was something else. There was a couple of other things around at the time, but there was a lot of reasons to short it there, and so we did. It was some good trading to be had. Any other questions on that, guys? I think we need to think about wrapping things up here. I would recommend maybe looking at you could Google or go to YouTube and look up fractals. Okay, if you go to Google, YouTube, and go to fractals, I think you might come up with a lot of bootcamp analysis videos about the fractal nature of the market. Okay, and go from there. I would suggest that you, whenever you're doing your trading, guys, you look at your long-term time frames, like your daily charts. You wait for them to be swinging, like trending, like this, and you sell at resistance. You buy at support of those swings, or you wait for a change of trend, and then you trade your way along there, and you use the shorter term fractals to enter from. So you're using long-term fractals for analysis, short-term fractals for the trade planning and entry. It makes life so much easier. I mean, if you follow something like this Aussie chart, support, and you get your 15-minute change of trend at support of a daily swing, it's just a matter of time before you get into something that's going to rocket off for 1,000 pips. Right there, Kevin. Yep. We'll be keeping our eye on it. That's for sure. Guys, have a good day. And I have to shoot. We'll see you hopefully next month for another webinar. Have a good one, guys.